Hope you're having a great day today. I want to talk to you today about interest rates and their impact on the market. There's been a lot of transition going on in the real estate market recently, and there's a lot of fear because people think interest rates are, well, they don't think, the interest rates are shooting up. And a lot of people think that the prices are shooting down. And I just want to address some of those things and show you how the real estate market, when you're buying and selling, the impact that interest rates can have on your purchasing power. So let's take a look. If you had bought a home in June of 2022, just a few months ago, in June of 2022, the interest rate was 5.81%. Wow, that's like really high compared to where we've been. But man, it seems low now today, seeing what they've done since then. So let's say that your interest rate is 5.81% in June. You're buying a house where you're getting a loan of $300,000, right? There's your loan amount, 300,000 bucks. At that interest rate, with a 30-year fixed mortgage, you're looking at a monthly payment of $1,762. That is principal and interest. We're not going to include any insurance and taxes for the purposes of this demonstration. So, okay, you bought that house, you got a loan for 300,000 bucks, you're paying $70.62 a month in principal and interest. Well, let's fast forward to November of 2022. So in November, those interest rates have climbed to 7.3%. So in that same scenario, a lot of people right now are saying property values are plummeting. Well, they're not really plummeting, but since June, I did some research in Rutherford County. The values are down about 4% if we base it on the sales price per square foot. So if you're down 4% in your purchase price, let's take that same house. So now if you're 4% less, your loan amount is 288,000 bucks and your interest rate is 7.3%. So that means your monthly payment's going to be $1,974 principal and interest. Hey, guess what? You paid less for the house, but you're paying $200 more a month. If you're paying cash, you got the house for less. If you're paying with a mortgage, you got the house for more over time. In fact, if you were to pay that whole mortgage off over 30 years, you're looking at paying an extra 79,000 bucks over the life of that mortgage if you had, compared to if you had just bought the house in June. So let's fast forward again, going into our future machine and looking at March 2023. Well, the Fed's been raising interest rates, which have a direct impact on where mortgage rates go. The predictions are that it's going to be 9 to 11% at some point in 2023. So that seems crazy. It may happen, it may not happen, but we're going to use an interest rate of 8.25% in March. That a lot of you are saying that the value of homes are dropping. Well, the experts in the financial arena say that our values are going to go up 2 to 4% in 2023. For the sake of our argument, let's say that from November to March, they dropped 4% just like they did from June to November. So that would mean from 288 on your loan amount, you now would have a loan amount of 276.5. So your purchase price and loan amount is now almost $25,000 less than what it would have been in June. But at that 8.25% interest rate, take a look at where your payment ends up. It's 2,077 bucks a month. Holy cow. That's like 250 bucks or more than that, per month more, even though you're getting the house for less money. Over the lifetime of that loan, you're looking at paying $113,400 more than if you had bought the house in June at the higher price. All right, so that's if prices drop. Let's say the experts are right and values actually go up, and that from now until March of 2023, let's say they go up 2%. They're predicting in 2023 they're going up anywhere from 2 to 4%. Let's say they go up 2%, right? That would put our loan amount at 293.7. 293.7, and at 8.25% interest, we're looking at a monthly principal and interest payment of $22.06. Holy cow, that is over the life of the loan, $160,000 more than if you had bought the house for 300K in June at 5.81%. So here's what you need to know. Those interest rates have a huge impact on your purchasing power. They have a huge impact on what you pay per month. It's something that you need to keep in mind. So we're doing this because we want to educate people so you can make wise decisions on buying, selling, what the market looks like. But here's something to keep in mind. If you are selling a house and you're pulling a lot, let's say that over the last 2 years, your value's gone up 50, 70, $100,000, and you're selling and pulling that cash out of your house and using that to put towards your next house, well, the interest rates don't have as much impact on you because you're borrowing less money. Same thing if you have cash. You can buy the house, and a lot of these folks where the interest rates have priced them out of one price range and pushed them down into a lower price range, you are in a position with cash to be able to go out there and probably get a good deal on a house. So the key here is do your research, learn what happens, learn how interest rates affect things, learn how all of this, if you're buying, if you're selling. We are going to, in the coming weeks and months, we're going to be doing some looking at real estate statistics, how the real estate market works, doing some education so that you and your family can learn what you need to make smart decisions in all of your real estate purchases and sales. So check out our YouTube channel, subscribe, and you will get notified the next time that we are doing something like this that could really benefit you and your family.